Okay, so good morning, everyone. So in today's session, we're going to work through last year's test paper. So what I've done is I've gone through it and sort of worked out what the solution would more or less have looked like based on the information I could see. Okay, so as we do not, as lecturers, get the memos, this is what I would have done to get the marks, and then I've indicated more or less what marks would have been allocated. Now, this paper was divided into two questions. The first question was a discussion question, which was what amount should be included in gross income. And then the second one was to work out your tax liability. Now, similar to the test you guys are writing next week, I expect to see something similar to this. It might either be a discussion question whether it should be included in gross income, or alternatively, it should whether you can deduct it in terms of the general deduction framework. Guys, there's a test paper here in the front. Okay, so what that also means is you need to know the definitions as well as the case law that links with that specific areas of the definition. Okay, so let's go through question one and see what information you were supposed to see. Okay, so the first thing, like I always say, is you start with you are required to. So what are they expecting of you? So the first question they said, discuss whether the above amounts would be included in the gross income of Rosewood Wellness Center as at 31st of March 2020. And then they specifically note here, make reference to relevant case law. Now, the reason they tell you that is there are marks allocated for that, because you'll see the mark allocation is 15 marks. And when we read through the information, if you do not include the case law, you will not actually pass this question. And then, okay, so that was the only part of the question. So let's read what information that they actually give us. Okay, so they tell you you are a part of VTO, a medium-sized firm providing insurance and consulting services. At the end of 2018, 3 retired doctors decided to invest their lifetime savings into a mental health and wellness center. The registered center is the form of a private company to trade under the name Rosewood Wellness Center. The company has a 31st of March year end and is planned to open its door to its first customer or guest at the beginning of the 2020 financial year. So they will only pretty much be trading from 1 Jan up to 31st of March is what this information is telling you. Okay, so trading. The center is located on a private estate owned by Dr. Frederick Barnett and is extremely exclusive facility that attracts mainly celebrity A-listers who crave privacy away from the public eye. Therefore, there are very limited number of rooms available and the guest needs to book well in advance and pay a 50% deposit. So what this tells you is they have to make a booking, they have to book in advance and they pay a deposit to secure their place. Then they tell you when the deposit is received, the center starts working on tailoring the room. So they tell you what they do with that deposit and according to each guest's individual tastes and preferences. Due to this, if a potential guest cancels their booking, the deposit is forfeited. Okay. So if they cancel, they forfeit the deposit. So that is what you had to see out of that. Now, the deposit is 50% of the amount that they need to pay. The center hosts a variety of treatments and therapies such as yoga classes, spa treatments, hypnotic therapy sessions, acupuncture, and so forth. And these therapies need to be booked in advance as well because they've got limited slots. Should these bookings be cancelled within 24 hours, the deposit will be refunded. Okay, so this one, has a condition. So you get 24 hours to cancel. Okay. And then they will refund it, cancel and get a refund. Due to Dr. Leonard Gray being extremely pedantic in nature, he requested that 2 separate bank accounts be opened. Okay, so we've got 2 separate bank accounts being opened. The one is for the guest stay bookings, and the other one is for deposits received for treatments offered. Okay, so they've got 2 business accounts. And then by 31st of March, they tell you they have received 3.5 million worth of deposits for the bookings for potential guests for their stay. So that's the accommodation deposits. And then 680 for the deposits relating to treatments. Okay, so based on this information, now they want you to discuss the above amount. So you can see based on the information, they are basically talking about deposits for 2 different types of services. So in your solution, you can start off with the generic information on how to account for the gross income. And then we start splitting it out between the 2 different deposits. Because the one has a condition. So if you cancel it within 24 hours, you get a refund. Whereas the other one, if you cancel, you forfeit it altogether. So this is the type of information you have to see. Now, what we have to look at again is if we go back to what is gross income, we have to go look at the definition of gross income. So let's quickly see what is the main components. So we say for gross income, it's your total amount, cash or otherwise. Now, in this scenario, we've received cash. Okay, then the next thing is it's received by or accrued to the taxpayer. Okay, so this one is where we will have to start discussing whether it is actually received by or accrued to the taxpayer because of the nature of a deposit and the fact that it might potentially have to be repaid and there might be a condition linked to it. So that one would be a question mark. So that is where most of your discussion would generally sit. And then we talk about in the year of assessment. So has it taken place in the year of assessment? Now, our year of assessment would have been from 1 April 2019 up to 31st of March 2020. So by the 31st of March, we have received the amounts noted. So yes, it has happened in the year of assessment. Sorry, let me just scroll back, went off the page. Then we need to discuss, is it capital in nature? So here you would have to look at what was the intent of the business. Is this capital nature or is it actually revenue nature? Now, in this scenario, because of the fact that we are basically providing a service, this would be revenue in nature. And then the last thing you would have to do is you would have to then reach a conclusion. Okay, so for this type of question, because it's 15 marks, you have 2 types of deposits. You would briefly mention the total amounts, cash or otherwise, as well as the year of assessment and capital in nature. Now, because it would be exactly the same for all of them, you would only note it once, and then bulk of the discussion would actually fall over the received by or accrued to the taxpayer, because that is where the main issue is lying. Whether what we've received is actually whether it's received by or accrued to the taxpayer. So have we received the deposits? Okay, so the first thing, if we talk about just the receipts or the accruals, the general rule for tax is that we account for it at the earlier of the date of receipt or accrual. Now, in this scenario, okay, I'm going to share the Excel file with you guys. So let me just know if you can see it before I continue. Okay, can you guys online, can you see it now? Okay, so then I'm going to continue. Okay, so the first few things, I'm just going to add it in here while we're talking about it. So the first thing we said, based on what I've written, is we will write that the total amount of cash or otherwise. Okay, so total amount of cash for the bookings and treatment was received during the year of assessment. Okay, so you literally just note the fact that a total amount of cash for the bookings and treatments was received during the year. Now you can include in here for the bookings, it was 3.5 million. I'm just going to abbreviate it. And for the treatments was 680K. So you just note that and you would have received a mark for that. Then you could also say the amounts received is not capital in nature as it relates to the business services that have been or that will be provided, because they haven't actually provided yet. So it can be services and accommodation. Okay, so we are specifying the fact that it's actually revenue nature because of the nature of the type of item that we are receiving. Then you would actually note as well, what I've said is that the amount is included in your gross income at the earlier of the date of receipt or accrual. Now, we have actually received, let's just add in here. So the amounts have been received by the Wellness Center by the 31st of March 2020, which is our year of assessment. So we have actually already received the amount. So we are working on the receipt amount. But now the next question is, has it actually accrued to us? Now let's quickly talk about the court case that you had to list. So the amount is actually received by the taxpayer and included in their gross income if it is received by him for his own behalf or his own benefit. Now that is what the Geldenays court case says. So you have to go list this. So it says it is received if it is for your own behalf or your own benefit. So now we have to talk about that as well. Did the company actually receive it for their own benefit or not? Now, how do we actually know this? We go look at whether there's any obligation to repay this. So if there's an obligation, then we have not necessarily received it for our own behalf, for our own benefit at this stage. So there is no receipt where unconditional obligation to repay the money exists. That is when you actually receive it. So you go list this. Now what we have to do now is we have to discuss the two different types of deposits separately, because the one, they forfeit it all together, so there's no condition or no obligation to repay it if they don't take the accommodation, and the other one, there is still a condition that needs to be met. So I've split it between the booking deposits and then the treatment deposits. Okay, so for the booking deposits, what you would have said is, the first thing you would note is that that accommodation booking deposit is non-refundable, and therefore is actually already received for the benefit of the taxpayer. Because it's not refundable, they have received it for their own benefit. Then you go on to note that the deposits are not subject to conditions, since the customer forfeits the deposit should they cancel their booking. Thus, there's also no obligation to repay the amount. Okay, so that links into your Helden Hayes fact that there needs to be an unconditional obligation. So there's no obligation to repay this amount because of the fact that they forfeit it should they cancel it. So therefore, your booking deposit will be included in your gross income as it was already received by the 31st of March, which is our year of assessment. Okay, so yeah, I've covered the year of assessment. So you can either do it here at the top, or you can discuss it in the question as well. Now, what you have to do is you have to talk about the remaining 50%, which is the accommodation. Now, that remaining 50% that will have to be paid is conditional upon when your guest actually stays at the accommodation. So the deposit will be included in gross income, but that remaining 50% will only be included once they've actually stayed in there. And that is according to your Moy court case, which says it will only be included in your gross income once your taxpayer becomes unconditionally entitled to that amount. So that is when they physically stay in the accommodation. So therefore, then you conclude based on your booking deposits that 3.5 million will therefore be received by the centre, and that is included in your gross income in terms of the definition. Okay, so that is booking deposit. So you're all okay with the booking deposit because it's non-refundable. It should be included in your gross income. Okay, are you guys online okay so far? Estian, yes, I will upload the spreadsheet on VC Learn after the session. Okay, so then if we go on to talk about the treatment deposits. For the guys that came late, there's a question here in the front. You can just pick it up. Okay, so for the treatment deposits, what we said is the fact that it is received for their own, has not been received for their own benefit as yet, because there is a condition that is linked with that specific deposit. So that deposit is refundable, but only if they cancel within 24 hours of making the deposit. Okay, so this treatment deposit has a different component to it. Now, what that means is essentially all your deposits that we've received on the last day of the year would have fallen into that 24-hour booking cancellation, and the rest would have already been included. However, so that's what you then write. You say the amount will only be included into gross income once the taxpayer becomes unconditionally entitled to the amount, and you talk about the Moy court case again. So this is when the 24-hour cancellation period expires. However, then the Pyatt case says, specifically relating to deposits, that says that if a taxpayer has put the money off from deposits in a separate trust account outside the control, the deposits might not be taxable. So even though we have to refund it, have they actually put it in a separate trust account? No, they haven't. They've done separate business accounts, but they haven't got a separate trust account. So what it means is once that money hits your business account, you have actually physically received it, irrespective of the fact that you might have to potentially pay it back. So as the refundable deposits have not been placed in a separate trust account, it is deemed as if the amount has been received by the taxpayer on its own behalf. Okay, so you have to include that information to say, well, because they don't have a trust account, it is deemed as if they've already received it. Then you go on with the Witwatersrand Association of Racecourse case that says that once an amount has been beneficially received or accrued to a taxpayer, the amount is taxed even though the taxpayer may have an obligation to pay it over to some other person. So even though they might potentially have to pay it back, it will still be included. Okay, but what it means is now we are getting taxed on it in our gross income. But if you have to refund it in the future, then SARS will allow you a deduction for that amount to reduce your taxable income. So what they say is based on this, you would actually have to include that 680 into your taxable or your gross income. But in the event that you need to refund it, you will be allowed a deduction. Now, I didn't write that at the bottom. So what you can write in the event, just make it black. So in the event a portion of the funds or the amount received needs to be repaid, SARS will allow the taxpayer a deduction in that year of assessment. Okay, because then you actually haven't received it at that stage, and then you would be allowed to get an additional deduction. Okay, so this is more or less what you had to write down to get the marks for this type of question. Okay, before we move on to question 2, do I have any questions on this? So the guys sitting here in class, do you have any questions on deposits, the 2 types of deposits? And the guys online, you can just, if you've got a question, just type it in the chat function for me. Is there anything you guys are wondering about? Does it make sense how you have to do it? So I've done it in this format. You can also do it in a format where you put all the different main components, which I've put on the PDF, which we discussed initially. The total amount, cash received, cash or otherwise, it was received by or accrued to in the year of assessment. So those components. You can also go listed in that table format if it's easier for you, and discuss the specific things with each specific component as well. I will mark either way. As long as you can document it in some logical order, your thought process of how you got to your answer. Okay. And make sure you know the court cases. They are going to ask them on Monday. I just don't know whether it's going to be gross income or whether it's going to be general deduction formula. So you need to know both. And those court cases are summarized in your workbooks. Okay, so go study the summaries they've given you there in the information. Okay, so online, guys, do you have any questions?